How we getting on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you guys are new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week, and we break down some of the analysis we have performed to help give you guys a better understanding on how we are looking at tackling the markets. Now, this is a great series that we do on a week-to-week basis to help those beginners, but also those veterans in the market that are just wanting an additional scope or inside look on the markets themselves. Now, if you're not aware, I am someone who trades based on technical analysis, and I look at the supply and demand balance as well as order flow in the market. Now, by following structural laws, this allows me to get a deeper understanding on the bias of a market, and it also helps me understand when a market is reversing or changing trend. Now, if you guys go on to enjoy this video, don't forget to leave it a thumbs up. And if you have any questions with regards to the analysis I go through today, then please leave them in the comments below. Now, with all that being said, people, let's jump straight into today's Sunday sessions. So the first pair I'm going to start off with is actually the US dollar to the Japanese yen. Now, straight off the bat, just looking at this on the monthly timeframes, I think it's pretty evident to say that this market is within a bullish trend, and we should therefore be looking to buy into this market with a longer term bias. Now, just because the overall trend and the overall bias of the market is a bullish one, it doesn't mean to say that price isn't within a corrective phase, which would in turn mean that price is trading short. Before we go down on the time frames, I just want to point out an area of supply. So this green candle here represents buy orders before a heavy sell-off. This area of supply hadn't been mitigated. So now that price has traded into this to mitigate this area, what's happened is supply has been introduced into this market, which is going to encourage price to trade lower. Demand is also being offloaded. So any buy orders from this impulse that's traded us higher are now being removed from the market. People are taking profits from any buy orders that have been placed. So again, this is going to encourage bearish pressure to be put in. Now, what we can see as well is that price is starting to show weakness to the upside and bearishness is being introduced. So if we go to the weekly timeframes here, what we could look to do is actually refine this area, and I'm going to refine it to this last buy to sell region. This is a last buy to sell region because this here represents buy orders. This wick to the downside followed by wick to the upside represents bullish pressure. Again, you can see prices traded into this and rejected well to the downside. Now, what we do from here is we go to the lower time frames again to see what's happening within this rejection. Have we been delivered with some kind of structural break, change of character to, represent or tell us that enough supply has been introduced to flip this market? Well, it doesn't look as though we have yet. I would say the last structural point here on the daily is this low here. Price is yet to break that. But again, what we could do is we could actually refine this zone more so. I'm going to refine it to this area here. And as you can see, price is traded into the 50% mark perfectly. So buyers going down on time frames, that's not a negative thing. It means that we can get a more refined look at the market itself, and we can be vigilant and quick with our response when we are delivered with confirmation of some kind of bearish reversal. Let's go down to the 4 hours. So here on the 4 hour time frames, we have in fact been delivered with a structural break. So if you're someone who's not preemptive as such, but may be looking for less confluence before entering in a market, this would probably be enough. What I would be looking for now is for price to trade us back up into a fractal area of supply. So something like this. This again here represents bullish pressure. Price will trade up and into this to set a lower high if the new bearish structure is being printed in before trading us lower in the market, creating what will be bearish structure. So if price does trade up and into this, rejects well, we can look to get involved in some short positions. These are my thoughts for this market, and I do believe price is going to put in this structure moving forward. So a position may look something like this. I'd be comfortable placing a trade like so, should we be given the confluence to actually enter in. So what I want to see is price trade up and into this area. I would then go down to the 1 hour, 30 minute and 15 minutes, and I'd look for another break of structure to take place in and around this area like this here. Once that's happened, that will confirm to me that this corrective wave here has finished and the new impulsive wave is ready to take place, therefore deeming me a valid entry. And as you can see, it would generate us with a 11 RR trade. This is 11% for every 1% we are risking in this market. So it has the potential to offer us some brilliant returns should we be given the right confluence to enter. So that's my analysis for the US dollar Japanese yen, and that's how I see price playing out this week. Okay, quickly heading over to XAU USD. So this is the gold to the US dollar market. Looking here on the daily timeframes, we have been delivered with a break of structure to the downside. This is a clear break in structure. Why? Because this low here created the highest high, therefore suggesting that price is now predominantly bearish because we are breaking those lows, should be protecting the highs. That is the structural laws of bearishness. We therefore want to be looking to go short in this market. Now you can see here, I've marked out an area of demand. So I do believe that we're going to have some bearishness to begin with, trading us into this area of demand. Demand is going to be introduced, which is going to encourage price to correct itself. Once price corrects itself, it's going to come and test this area, which is actually a fair value gap. Once price trades into this, we're going to clear any remaining supply that's left over in this market. That's what's going to turn price to the downside and create us that bearish opportunity. So again, I am looking to go short in the XAU US dollar market. We just need to wait for the right confluence in order to actually enter in. So if you wanted to, you could mark out this area here as an area to buy into. I wouldn't say buying into this market is risky, especially from an area of interest, because this is a predominantly bullish market. So we would therefore be trading with the majority traders. And should price trade through this, absorbing this area of supply, we would then further profit from any buy positions we did place from this area of demand. So I am looking to short this market. I just want to wait for the right confluence in order to enter. That would come from a penetration from this fair value gap, rejection to the downside, confluence would come from a break of structure. We would then look to enter in this market. But as I say, there's no harm in looking to buy into this market from this area of demand here. Okay, now moving over to the US dollar Swiss franc. This is another pair I've been looking at recently, and as you can see, price is playing out beautifully. This is a trade that we actually predicted and analysed in previous Sunday Sessions videos, and an analysis that was given over in the VIP chat. So anyone that's involved in this market and buy positions, well done. Anyone that's looking to enter in buy positions from this market, we need to be looking for areas of demand. We just look here on the weekly. There's nothing that screams out too much. However, there is an area here that may be of interest, like so. And then we could also look to re-enter by our entry below here. Now, the reason why I believe price will trade down and into one of these areas is because with every impulse is a correction. So this here would be seen as an impulse. It's more than likely that we're going to see some kind of corrective wave before a further impulse to the upside. This is not foreign to us at all. This is part of the structure that's put into markets. So I do believe price is currently in pursuit of putting in a corrective wave. Does that mean I'm going to sell into this market? No. I'm just going to wait patiently for the opportunity to buy in and add to any buy orders that I may already be involved in with this market. So again, if you are looking to get involved in this market, head over to the weekly timeframes. Look at the wick here and the start of the last week's candle. Look at the wick here as well, and the top of the wick from 3 weeks ago. These are going to be two areas of interest that you guys can look to get involved from here on the US dollar Swiss franc. But again, that's my analysis for the US dollar Swiss franc. Very quick and brief. What we are seeing is price accumulating over on the highest of time frames after price has penetrated a very large area of demand. This, I do believe, is the start of the next extreme higher time frame impulsive wave to the upside. So if you are locked in on buys at the moment, well done. Okay, now I'm going to finish off here this Sunday sessions video with some Great British Pound to Japanese Yen analysis. If you watched last week's Sunday sessions, you'll know that I was looking to short from this area of supply. What I explained to you guys was that price was distributing. So price was in prep for a down move. A distribution is price basically offloading demand and introducing supply. It's a way of orders being removed and introduced into a market. So this was the start of a reversal in trend from bullishness to bearishness. As you can see here now, we've had the distribution. Price has traded to the downside. What we're going to see now is the bearish structure being printed into this market. We need to look for areas at which price can pull back into now to create a lower high in order for us to deem a valid entry. Straight away, what's standing out for me, this whole area of bullish pressure. I want to see price trade back up and into this. It's actually the midpoint of this leg that took us to the downside, so I think it would be perfect. And there are plenty of buy orders there that probably need to be cleared. So I would love to see price trade up and into this, like so, break structure to the downside, pull back to set a lower high, and then trade us lower. We would look to get involved from this this lower high that's created after the break of structure. So just to give a bit more of an in-depth scope, this is what we would probably be looking like. As you can see, price would trade up, putting in that corrective wave, trade into the area of supply. Supply will be introduced that will break structure to the downside. Price will pull back to set a new lower high. As you can see, this in itself is a lower high on the higher time frames, and then we look to get involved in those short positions. It's very important that we wait for confirmation parameters before we get involved in markets. This is obviously just gives us a higher probability of being successful when we do place our short positions or our long positions in these markets. But that's my analysis for the Great British Pound Japanese Yen. Very, very simple. I'm going to set an alert here at 19642. As soon as price trades in, gives us relevant confirmation, I will be looking to short the market. I'm also going to set an alert here at 0.8771, just near the area of the break of structure. So what this could be in some basic laws is a break and retest, like so. This would be our break and retest. We'll just remove this. As you can see, we have the break of structure. Price pulls back to retest before trading higher in the market. That's our break and retest strategy. You know, so for me, back in the day when I used to look at the markets in a basic way, I'd be looking at break and retests and breakthrough strategies, things of that nature. Again, with XAU USD, we have a break and retest. You'll notice that when we look at patterns in a market, you know, double tops, double bottoms, head and shoulders, break and retests, these things are all the exact same thing, just a different way of explaining it. So, for example, as you can see, we've got clear head and shoulders. It would also be a break and retest. It's broken, structured to the downside, retesting that area before trading lower. It's also a distribution. You know, so all of these things and these ways of explaining the markets all brew down to the same thing. And that's why it's very important that we look at structural laws and price action in a market. So I've set my alert here at $2,624 an ounce. As for the US dollar, Japanese yen, we could set an alert here at 155.17. Wait for price to trade up, again giving us confirmation to enter. Then we can look to get involved. So that's actually going to summarize this Sunday sessions video. Very quick and brief, I know, but that's all that's needed. I've given you guys some key areas to look to enter in from. I've given you my bias and my understanding and reasoning as to why. Now all that's left to do is wait patiently for price to play into our hands so we can take full advantage of future price movements. If you guys have learned a thing or two from this video and you've enjoyed, don't forget to leave it a thumbs up. And if you have any questions or queries with regards to the analysis I've gone through today, then as I said before, please leave them in the comments below. But with all of that being said, guys, I just want to say a massive thank you for watching, and I'll catch you all in the next video.